Thanks for tuning into this earnings conversation with Mr. Satish Pai of Hindalco. The numbers, obviously, for as is the case with most ferrous and non-ferrous companies, have not looked that great, but relative to what Bloomberg estimates were on almost all line items, including EBITDA, Hindalco's numbers are much better. Let's get Mr. Pai to talk about what went right or what went wrong in the quarter and what does he expect happens in the quarters ahead. Mr. Pai, great having you. Thanks so much for joining in. But before I talk about the quarter really and the numbers, I'm intrigued by this question which I want to understand from you. There's this vision outlined in the investor presentation about shifting from being a metal manufacturer to a solution provider. You've spoken about this to me once very briefly in the past. Can we start off with this because there is a bit of a detail this time around?
So, the best way to describe that would to give you a practical example that we have put in our press release this time. So, if you take the Tata Ace, where we are building the aluminium box on the last mile vehicle. So, what that means is that in the past, maybe we would have just sold aluminium sheet. Whereas this time, we are now going and taking the aluminium sheet and extrusions, actually doing the machining, welding, making a box. So that's what we mean a solution provider. So we are not just providing extrusions and roll sheet anymore. Whether it's buses, whether it is trains, we are actually moving closer by doing more machining, more welding, and getting closer to the end product. So that's why, besides providing the aluminium, we are also becoming solutions providers.
You reckon this can make a quote unquote a metals company look materially different than what a metals company currently looks like, say, 5 years out?
I think our intention is that to differentiate us from, let's say, a typical upstream metals company to a metals company that got a large value-added business and hence has got access to a much better value chain from a results point of view. So yes, we are trying to make ourselves look different from a very traditional metals and mining company.
And this is accretive values, not just from a perception and a valuation perspective, but also from a numbers perspective, you reckon?
Ultimately, that's the only thing that matters. So yes, it has to be accretive from a numbers point of view. And the only thing is that it will not be volatile with the LME prices going up and down, because the margins here tend to be a lot more steady going forward. So that's what we are really trying to do, get the company re-rated, basically.
Okay. Well, wish you all the best for that. I'm sure we'll have subsequent conversations on this. Let me now shift focus a bit on the numbers. So from an estimate perspective, yes, you've done way better than what the Bloomberg estimates were. But obviously, as was anticipated, there have been issues on. I mean, in the sense, the reportage has been lower on EBITDA, on net profit, etc. Do things look like, in some fashion, hopeful, considering the fact that there is a lot of chatter around China eventually having to give a stimulus at some point of time? And is that a trigger, or could things turn around even otherwise?
So look, large part of our business, which is the Novelis downstream business, the India downstream business, the copper business, all these I am very, very confident that going forward, they're going to continue to do well. The aluminium upstream business in India, which is the one that is the commodity business and is based on the commodity price of aluminium, is the one that is susceptible to what will happen to the Chinese economy or the overall macroeconomic, because commodity prices go up and down based on sentiment of how the economies are doing. So if I take the overall business, 60% of our EBITDA comes from Novelis, and I'm very confident Novelis had a great quarter. And every quarter now is going to be better than the previous quarter. So in general, the overall business of Hindalco is going to be good going forward. The one that is the most worrying or is exposed to the Chinese economy is the upstream aluminium part. But even in that, the good news is that our costs are coming down, coal prices are coming down, availability is going up. So, our costs were down 2% in Q1 versus Q4. And we are guiding that in Q2, it will be down a further 3%. So we'll be quite resilient in that upstream business.
Okay, so there's shipment growth, but the business still hurt. I'm talking about a follow-up to this answer on two counts. One is the upstream business, shipment growth, still the business hurt a little bit. Is that trend you are saying will look, I know sequentially is the wrong way to compare, but net, it will look better sequentially than what it's looked in quarter one, you're saying?
It should, at the worst case, if the LME goes down, we are hoping that it will look flat.
Okay, fair call. Novelis, and just again, um, a question. There was this much of canned destocking happening in quarter four, expectations that volumes will pick up in quarter one. And yet, I mean, volumes are down 6%, 879 kilotons, EBITDA $479 per ton. Do we see pickup in quarter two, starting quarter two, or is this deferred to the latter half of the year?
No. The Novelis management has been very emphatic that we've already finished the month of July of that quarter, so they are already seeing the volumes of can coming back.
Okay.
So they are quite confident that from a volume point of view, Q1 was the bottom. But then the cost started to come in line, and you see the EBITDA per ton reached $479 a ton. So we are quite confident that in Q2, as the volumes come back, you're even going to start to touch the $500 per ton EBITDA much quicker than what we had originally thought of.
Okay, well, that's good news. The other aspect is on the global side. By virtue of, and I'm trying to think if you can give me an economic answer as well, but by virtue of all that's happening on the interest rates, housing demand, and how does that shape up for your business? And two, the two spaces which seem to be doing really well, aerospace, auto, how's the demand been? How do you expect it to be?
So for auto, for Novelis, it was an all-time record quarter with 200 KT of shipments. Majority of our contracts are now towards electric vehicles. And in every part of the world, electric vehicle demand seems extremely strong. So we see that, auto sheet demand driven by electric vehicles is going to continue to be good going forward. Aerospace, as you said, has come back with a roar. Everybody's flying again, and all our customers are, busy churning out planes. So aerospace as well, we see going forward very strong demand. So now comes the interesting one, which is building and construction. It's very interesting. Single user housing starts in the US have been up for 4 months in a row. Very counterintuitive in a rising interest rate environment. But for 4 months in a row, the housing starts have been going up. Refurbishment of old houses is going up. So we are starting to see the building and construction market starting to come back in the US. So there could be a feeling that interest rates have peaked. Maybe everyone says there could be one more increase of 25 bps, who knows? But people are starting to think that the interest rate increase is probably reaching some sort of a plateau, and people are now looking beyond that.
Okay. Mr. Pai, one last question. As you sit at the end of quarter one and look into FY24, what is that one factor that you reckon would have the most lasting impact for Consolidated? I mean, there are a lot of moving parts in your business, and therefore a lot of things that might impact. If I've still asked you to hazard a guess on what is that one key factor, what would you say?
I think that generally the world economic environment is the single biggest factor that affects us all. So if the world is economically growing, because this year the growth is a little bit anemic. The world economic growth is not that great. It's 2.3%, the IMF said. So if next year that, the economic growth picks up, the Chinese economy is doing well, that's one, because then all those things will raise the boats in a rising tide. So economic growth of the, in the general world environment is what we need.
Right. Okay, Mr. Pai, lovely talking to you. And I'm sure we'll get more chances to talk about the vision, because that's an interesting one. Would love to talk more about that at some point of time. But thanks for joining in today and giving us your thoughts.
Thank you.
And viewers, thanks for tuning in.